Bearish engulfing. A bearish engulfing pattern involves a small green body followed by a large red candle that completely engulfs it. So we have a small candle. It could be red or it could be green. Let's say we find this, and after that we see a big solid candle, bearish engulfing. When we see this pattern, this is a good indication to exit the market, or for people who are looking for a short position to take the trades. When this pattern occurs at the peak of a bullish trend, it signals a significant reversal in the market. Spotting bearish engulfing candlestick at key resistance levels can provide a strong indication to exit the market. So this is the bearish pattern. So just remember one thing, we consider bearish patterns on resistance area, and we consider bullish pattern on support area. Let's say we are already in a trade and we are in long position. We are holding some asset. The price was at $1 and it's just reached to $2 at the moment. So when it's at $2, we see that there is a resistance area. At resistance area, we find sellers. We expect that there are going to be sellers. Similarly, on support area, we expect that there are going to be buyers. So when it touches to $2, there is a resistance up right there. So what we're going to expect, they're going to sell their asset to push the price towards back down. So when the price touched to $2, there were sellers. They pushed the price back down with a strong, solid candle. That's what we call bearish engulfing. When we see this, a small candle followed by a big, large red candle, this pattern is called bearish engulfing. When you find this bearish engulfing on resistance area, always consider this as bearish pattern. And if you're in the trade, just exit the trade right there. Let's look at the example of bearish engulfing. The price went up from $1 to $2. We tried to break this. We didn't break that. We tried to break it again. And this time there is a small green candle followed by a red large candle, right? This is the bearish engulfing. So when we see that bearish engulfing, it's representing there are a lot of sellers in the market. Sellers are in control. There are very less buyers in the market. And as we can see in the example, the price went down after that bearish engulfing. So this bearish engulfing was good indication to take the short position or to exit the market if you are already in the long positions. So I will repeat this thing again. All alone, only one condition is not enough to take the trade. So when we look for the trades, we look for multiple conditions. This bearish engulfing is going to be one of the condition while taking the trade. So we will combine all these conditions together, and then we will be confident, okay, we have a lot of conditions to take a short position or long position. Bullish engulfing is opposite of bearish engulfing. A bullish engulfing pattern occurs when a small red body is followed by a large green candle that completely engulfs it. If I explain this in simple words, that this candle, bullish candle, engulfs the previous candle, right? So this candle is going to be smaller in size and this is going to be bigger in size. Or sometimes you see that it could be green or red. When this pattern emerges at the bottom of a bearish trend, it signals a significant reversal in the market. Spotting bullish engulfing candlestick at key support levels can provide a strong indication to enter the market. As I said again, we look for the bullish patterns on the support area and we look for the bearish pattern on resistance area. So bullish engulfing is bullish pattern. Whenever we expect buyers to come back in the market, we expect that on the support level. Let's say the price touches that support level at $1. That is our support area. When the price is touching that $1 and we see this bullish engulfing in the market, it's going to show us some buying momentum. It will show us there are less sellers in the market and there are more buyers in the market. So when there are more buyers in the market, what are we going to expect? We will expect that the price is going to slightly go up from there. Here is the example of bullish engulfing. The price dropped from $2, came down to straight to $1. Here we have a small candle, red candle followed by a large green candle. So here we have a good example of bullish engulfing. As we can see, the price started going up from here. Why? Because this is indicating us that there are more buyers than sellers in the market. So it's going to be our one more condition in the market if we are looking for the long position, that we have indication that we have buyers, and if we combine this condition with our other conditions, we can take the trade.